Welcome back to the watch list. I'm Diane King Hall. For a look at the broader market and the macro moments that matter, I want to welcome in David Stryzewski, CEO of Sound Planning Group. David, thank you so much for joining us today. All right, let's start out with the macro picture, especially because we got new minutes from the Fed today. It didn't really change anything in terms of the market action. Obviously, there was a lot of commentary in the minutes about inflation.
Right.
It's part of the mandate of the Fed to keep inflation in check. You've been critical of Fed Chair Jay Powell's handling of inflation. Is that still your positioning, and can you explain to us what's behind that?
Yeah. As we relate to the Fed, I think it's important to think about this. My desire is not to be critical for the sake of critical, but when you have the ability to affect so many lives with the one or two decisions that you might make, that impact has such massive force. I think it's important for us to judge those ideas. Was that a good idea, a bad idea? Were we right or wrong? How's that thesis working out? And so we look back to, 2020, we had some inflation showing up because the ports shut down. Then when 21, we're sitting here, the supply chain, we got a bunch of dollars, chasing a few items. And then now we're sitting here with systemic inflation, and it was told to be transitory the whole time.
Well, so to your point, I feel like my sense is that the Fed realized that they may have been a little late in terms of how they were addressing inflation. And even the transitory commentary, that's, seems like obviously that was a misstep. Another thing that stood out to me in the notes is some of the concerns about the potential for impact to supply chains. They didn't mention the tariffs per se. They didn't mention President-elect Trump per se, but you could tell that was kind of bubbling in the background. Do you have some concern about the impact to inflation from these looming tariffs that we're expected to get from the Trump 2.0?
Okay, so good question. Couple things that I'll just note. I expect inflation because inflation is caused by printing. We've been excessively printing such that it's about $1 trillion every 100 days excessively right now. Milton Friedman answered this question back in the day. There's only inflation that exists inside of economies where printing's taking place. So the more you print, the more inflation shows up. So it's kind of a sneaky way of taxing us as well, if you can be honest, because our buying power is now less. If I look at the price of gold and silver over the last 2 years, well, guess what? The dollar's gotten stronger, but gold's gone up.
Gold's risen, which doesn't usually happen.
Because it's priced in U.S. dollars, yet it is literally the definition of an inflation hedge. So if gold's going up, Bitcoin's going up, I would say that that's because inflation's still here. It's true. And then we've got reshoring, friendshoring. Those are more inflationary things. We're driving, our boats around, 3,000 nautical miles now to deliver gas. And so that's more inflationary by price. And so there's a lot of changes.
Do you think with the move in gold last year that some of that was it was just a hedge and a protection that maybe wasn't necessary, but that's just what it was?
Well, I think about it like gold like this. If we look at who's actually buying it, it's the
China
IMF.
as well. And,
central banks. Big organizations around the world that formerly were purchasing U.S. Treasuries. Why is the 10-year Treasury, why is the 30-year Treasury so high? It's because the market's always looking for a bid. And if no one's bidding, it's got to go up higher. And so it's got to get up higher because the demand is so low. No one is buying our debt any longer. China's not buying it. The Saudis aren't buying it. Now Japan's not buying it. They have to stabilize their own system. And so they've turned to gold because no one wants a long-dated IOU on U.S. dollars when we just print as the only answer whenever challenges show up. So,
given some of the weakness that, I want to broaden out to some of the equity action that we're seeing to start out this year, given some of the weakness and chop that we're seeing to start out this year, and especially how we closed last year, we did get a Trump bump.
Yes, we did.
But it's flagging now. What's your expectation, your outlook for the growth trajectory for the S&P 500 for equities this year in a new President Trump regime?
Well, there's no question that this is a very pro-growth agenda. When you do supply-side economics, that's going to put us in the right position. When we do more infrastructure spending and we do more manufacturing, that's really good for our nation. So it takes a minute to get things going. I'll say one of my biggest concerns is that when you have a Department of Government Efficiency and you begin to cut back on things, one, you got to sell these ideas to the people that are getting cut on stuff, and that's not easy. So the leadership is going to be to turn on this. The second part is that when you've got some of these changes that are taking place here, I think that it's important that we that we understand what might implications be of people being deported that might be at your restaurant making food in the background.
Jobs.
So there's a number of things that are a really big deal to be paying attention to. But that also if you cut government, that's also a part of our GDP. It's been a big part.
Yeah, it's
recently.
a balancing act, especially when you think about the immigration equation and the jobs picture, because we have a tight labor market right now.
Right.
And like finding people to fill certain positions, it's difficult. So when you have immigrants fill certain roles, you have the opportunity to fill those, and yet at the same time, it's a balancing act.
I don't see college kids lining up to take those jobs. Right? So someone's got to do them. Or what? And so there's a few things that we've got to figure out in the national conversation. But where does the market go? I think the market ultimately goes up, but I think we got a mixed bag. So I heard the best analogy was like it's going to be like 75-65 in a football game. It's like hopefully we're on the 75 and not the 65. But that just means higher volatility.
Right.
So I'm a buyer on the dips right now, and so I'm personally allocating back in because I've actually allocated into cash positions or positions that I'm looking to. I know will likely go up, and then I will want to go back into the market when we see these dips.
What sectors? Where do you like risk?
Well, you got to be in tech if you're going to be getting the growth right now. So that's the whole story. But there's a lot of change that's occurring today. And so I think that we got to be more domestic than not. We got this drill baby drill concept going on, but we do it safer and cleaner than anyone in the world. We need to understand that that's going to mean oil and gas, but also metal miners. Metal miners are so beat up right now. They're so despised. They are on sale. And I can't tell you that there's probably going to be a sector that I think will lead longer and go further over the next decade than miners very specifically. We got a lot of data center things, et cetera. So there's a...
When you think about the industries that will benefit, especially if you think about tariffs and the potential to reshore in certain industries, where do you think the leaders will be in terms of industry leadership?
Great question. I think that that's going to be a mixed bag, and we've got a lot of companies that maybe shouldn't even be in business. They're not profitable, but yet because they're publicly traded, they still got cash that's showing up for a little while until they're not as popular. But it'll be an interesting thing to see where these tariffs, where these things might occur. But I'll say this: I think that we have a great opportunity right now. I think that the tariffs aren't really going to matter long term and beyond maybe just some saber rattling. But the BRICS nations is concerning, and the fact that they want to go away from the U.S. dollar and do a gold-backed deal. This is why I'm mentioning gold and silver, Bitcoin, crypto in general. Let's do it.
I lost you because we've got we're actually out of time, but I want to get 30-second thought on crypto.
Crypto is a great opportunity right now. We've got the most pro-crypto president in the United States, 60% of Congress right now that are on board with it. Bitcoin has not been the fastest transferable way of doing things, so it hasn't really adopted all the way. I think it should be worth a lot more than it is right now. Ripple is the company to be paying attention to. I believe that the United States will be looking at this as a swift dollar way of transacting and doing a lot of different things. So XRP is the ticker on that for people that are interested.
Well, okay. We're going to have to leave it there because there are questions about XRP, especially if you compare it to, say, Bitcoin. But we have to leave it there because we really are out of time. That's David Stryzewski, CEO of Sound Planning Group. David, thank you so much for joining us today.